Hi, everybody. Welcome to On the Money. I'm Maria Bartiromo. We can work it out, the latest numbers on jobs and the stock market touching new highs, how both numbers impact Washington and Wall Street.
The disintegration of Syria is a huge threat to the region of the Middle East.
Tony Blair on the risks to the global economy, what Britain's former prime minister says is Europe's biggest problem, and what it means on this side of the pond. Plus, diamonds are a business's best friend. I'll talk to the CEO of the largest online jewelry retailer about confidence, customization, and the competition's prices. On the Money begins right now.
This is America's #1 financial news program, On the Money. Now, Maria Bartiromo.
Here's a look what's making news as we head into a new week on the money. The stock market touching new highs. The Dow Jones Industrial Average broke past the record 15,000 mark for the first time ever on Friday. Also recorded highs for the S&P and the NASDAQ Composite. Investors were moved by a better than expected monthly jobs report. The unemployment rate stands at 7.5% in the United States. That is the lowest number since December of 2008. And a total of 165,000 new jobs were created in the month of April. That was better than expectations. The Federal Reserve will continue purchasing $85 billion a month, meanwhile, of Treasury securities and mortgages. It said that the Open Market Committee also hinted it may vary the size of its monthly purchases depending on whether the job market improves. They could increase it or decrease it, they said. The European Central Bank, meanwhile, cut its benchmark interest rate to a record 0.5%. That was a record low to boost the struggling economy in Europe. And the Oracle of Omaha is now a tweeter. Warren Buffett, third richest person in the world, has officially joined Twitter. His first tweet on Thursday said, "Warren is in the house." Plus, the sequester budget cuts, everybody's talking about them, but are they one of the reasons that we are seeing weak GDP numbers? This week, I spoke to the Republican House Majority Leader Eric Cantor about the sequester's impact on the American economy and Washington's reaction.
The sequester, in terms of across-the-board cuts, I don't think anybody chooses that way to go and reduce spending. But over and again, the House has tried to get the president to come along and join us with cuts that make sense. We all know we got a spending problem. We got to come together and try and address that so we can get this country back onto a growth track.
How much of the sequester has taken effect, and how much do you think this is going to be an issue later on in the year? In other words, is the sequester going to cause slowdown second half of the year?
Well, if you look at it overall government-wide, in entitlement spending as well as discretionary spending, I think the estimates are the sequester may amount to about a 4% cut. And certainly if you were to go and take that into context in the private sector, when you have to do these kind of things, you manage it, you go in and try and achieve efficiencies. Certainly there are areas in the federal government that we can reduce the spending on.
So where do we go from here after this busy week in economic news? Joining me right now is RBS chief economist Michelle Girard and Ken Volpert, Vanguard's head of taxable fixed income. Good to have you both on the program. Welcome.
Hi, Maria.
Hi
Thank
there.
you, Maria.
Thank you so much. So, Ken, let me kick it off with you. What do you make of this market hitting new highs at the end of the week? 15,000 on the Dow Jones Industrial Average. Would you put new money to work in the market today at these levels?
Well, I think you would. I mean, you have an economy that seems to be holding its own, even in the midst of a lot of fiscal drag with increased taxes and sequestration. And the jobs number today was very, very positive. I think much more positive than expected. The revisions were very positive. The participation rate actually held its own. Normally, it's been going down. We saw that actually stay at the current level. So there's a lot of really good positive signs in the midst of really a summer week or a period when we should expect that there should be some more weakness than we're realizing right now.
Yeah.
So that combined with QE, which is when you add Japan into it as well, it's over $160 billion a month that needs to find a home, and it's finding its home in risk assets right now.
Yeah, for sure. Like stocks, like real estate. Michelle, QE or quantitative easing happening all around the world, not just the United States. We got those jobs numbers out on Friday. What did that tell you about where we are in terms of the broad landscape for the economy? What was your sense of the jobs numbers?
Well, I think there was some relief. That 88,000 gain we had originally seen in March just didn't feel right. We had a better number for April, some upward revisions, as Ken noted. And I think when you step back, you just come away with an idea that, the good news is the economy isn't slowing as drastically as we had maybe feared this spring. But I think the bad news news and the reality is that we're just kind of continuing to muddle along. We're chugging ahead at a very slow, subpar rate. I don't think the economy was as good as it looked around the turn of the year. As I said, I don't think it was as weak as it initially looked in March. I think for the Fed, nothing's really changed. And this idea that they will keep providing support to the economy, I think remains firmly in place.
So is that the key here, the fact that we're sort of bumping along the bottom in terms of the economy, that keeps the Fed in place to continue its stimulus program, and at the same time we are seeing some growth. So it's sort of this Goldilocks economy, as they call it.
Yeah, well, and the other thing, too, that's getting a little bit more focus, and I think even from the Fed, is the fact that against this backdrop of an economy that's not growing terribly quickly, we actually are seeing inflation coming down. And this has actually got people speculating that perhaps the Fed will ultimately, or in the near term, end up increasing their pace of purchases. Now, I think some of that was dampened by the report on Friday, but, you know, there is, I think, something to be watching there as well. And I think it just goes back to the idea that we're going to be getting monetary stimulus both domestically and abroad, and that is going to continue to be, I think, providing a lot of support, like Ken said, for risk assets.
Yeah, Ken, what about that? I mean, as an investor, what do you look at mostly in these monthly reports? Do you look at the participation rate? Do you look at the age of the workforce? What's the important indicators that really catch your eye?
Well, I think you definitely look at the participation rate, because we've been on this decade-long decline in the participation rate. And a big drop happened after 2008 and into 2009. And the question is, how much of that is just cyclical drop versus how much of it is the continuing secular decline due to the baby boomers aging?
Yeah, the 6.5% unemployment rate is where the Fed said it's going to target as a beginning to start winding down the stimulus. But Michelle, earlier in the week, I thought it was interesting what came out of the Fed meeting, because they surprised the market a bit by hinting that there's actually a potential for increasing the monthly asset purchases, or they can decrease it. It all depends on these numbers. They also tweaked Washington a bit, saying that fiscal policy is limiting economic growth, I guess suggesting that that payroll tax increase that we got at the end of 2012 is actually hurting and keeping things slow.
Well, and I think, too, a couple of things. So you're right. The Fed made it even more explicit that they can adjust the pace of these purchases, how many mortgages and treasuries they're buying every month in either direction. And that was a message that we actually had heard first from Fed Chairman Bernanke in his, after the March FOMC meeting, his press conference. And I tell you, policymakers have been really beating that drum a lot over the last month. The other thing, as you said, was explicitly in the statement, they said fiscal policy is hurting this economy. They are kind of ramping up, I think, the rhetoric. They're trying to put pressure on Washington. Hey, guys, they're saying, we can't do this alone. I think it's even more than the payroll tax cut. They're worried about the sequester really undermining the economy as we move into the summer. And I just think that the Fed chairman is trying to get Congress to, I think the Fed wants to be, kind of rowing in the same direction across both monetary and fiscal policy. And so I do think he is trying to get more attention from policymakers in terms of fiscal policy and the risk that it's posing for the economy.
Yeah, for sure. So Ken, if the Fed begins to wind down all of the stimulus, walk us through the consequences of that. Does that mean that we see a sell-off in stocks?
Well, I think what you see is clearly you don't see as much money moving into the stock market. We're starting to see more and more flows into the equity space recently from investors, and I think you'll probably see less of that. And I think when they back off the QE, that means that more of the deficit that the federal government has, needs to be met by investors, regular investors, and institutional investors need to be buying that debt, and so they're going to be buying that debt instead of equities, and that's probably going to keep equities from continuing to climb forward.
Ken Vilpert and Michelle Girard, so good to have you on the program. Thanks very much. We will see you soon. Up next on The Money, Britain's former Prime Minister Tony Blair on central banks, Syria, and global growth.
If you simply offer people austerity on one side and no reform on the other, you're going to have a big problem.
And later, what market forces in metals mean for your jewelry box. The CEO of Blue Nile, online's largest jeweler, will join me. As we take a break, take a look at how the stock market ended the week. Back in a moment. Welcome back. Former UK Prime Minister Tony Blair told me this week that Europe's recession-hit economy is still very fragile. Earlier in the week, I sat down with Mr. Blair at the Milken Institute's Global Conference in Los Angeles. We discussed the potential dangers in Syria, investing around the world, and the trouble brewing in that $16 trillion European economy.
The big problem right now, I think, in Europe is probably as much political as it is economic. In other words, countries are trying to go through this incredibly difficult period of change. And you've got very low growth or no growth. You've got very high unemployment. In Spain now, the youth unemployment's topped almost 55, 56%. These are huge numbers. So for countries to try and make change without economic growth, this is a big political pressure.
People were very concerned that the solution in Cyprus will become a standard or something that others will follow, whereas the depositors really take a haircut. What was your take on the bailout of Cyprus?
I think it was the only thing that could be done in the circumstances, but in a way it illustrates the problem. Because if you're not careful, you're going to get a fragmentation even within the Eurozone. So that some countries are treated one way and other countries are treated another way. I think the last time we spoke, I said, the only thing I think that works is a kind of grand bargain that deals not just with the liquidity issue, but the solvency and the growth issues as well. And that means, I'm afraid, you've got to pursue policies for growth and policies for reform. But if you simply offer people austerity one side and no reform on the other, you're going to have a big problem.
So what about the austerity, though, going on, for example, right now in the UK? All of a sudden, we've got a mixed debate on whether or not, David Cameron and the Chancellor's ideas are going to work, because the economy is still looking anemic.
Well, here's the thing. For me, this debate between austerity and growth is a right-wrong thing, not a right-left thing. In other words, you've got to have a deficit reduction plan, but if necessary, you've got to calibrate that so that it's not happening so sharply that your growth levels fall, your deficit becomes worse, and you get a downward spiral. So, look, I think it's possible for the government to adjust. I think in a way it is adjusting, but I think it's important to balance the monetary effect that the Bank of England policies are taking with a fiscal plan that allows our economy to carry on growing.
We are, of course, in a global connected economy, and the emerging markets, certainly throughout Asia, seem to be showing real growth rates. Can we see the interconnectedness on the positive side of things rather than the interconnectedness on the negative side of things, which is what we saw in 2007 and 2008? Do you think that is going to be helpful for the U.S. and the Eurozone?
Yes, I think it could be. I mean, I'm optimistic about the new Chinese leadership. I think they're really smart, capable people who understand the next stages of reform in China are important, not just for China, but because of the interconnectedness of the economy. And, I'm optimistic about places like Africa. I think there are some great potential there in Latin America, out in the Far East in the ASEAN group of countries. There's the potential, at least, for the world economy to show some bright spots that start to keep things going. But I come back to the same thing, which is that the West has to show it's really sorted its issues out for the global economy to recover confidence in the way we want.
There's a lot of uncertainty about the regulatory environment. What's your take on how the regulatory environment changes or should change to, in fact, encourage that kind of confidence that we're talking about?
I think we need two things. First of all, we need a bit of predictability. The second thing is, I think we've got to take a view as policymakers where we say a thriving financial sector is actually an important part of the recovery. In the end, we need banks to lend. We need them to be out there doing, the Main Street business of lending to companies, giving people the chance to go and buy and own property, and they've got to do it responsibly, of course, but we want to see a bit of that confidence back in the financial sector too, and that's where I think the regulatory side, we've got to be careful we don't flatten a part of our economy that is, this is true of the UK, by the way, as well, which is absolutely essential to the recovery.
Do you worry about the downside risks of all this easy money, like from the ECB, like the Federal Reserve, even Japan right now, with all of this stimulus? What is the downside risk?
I find that really hard. I mean, I find it one of the problems for policymakers about this whole financial crisis is that it's intellectually difficult. And so, yes, in one way, I have an anxiety about all that money being pumped in. And then on the other hand, I say, but if that wasn't happening, what state would we be in? And for sure, the actions of the European Central Bank, for example, have, they brought the bond yields down in Spain and Italy significantly. I mean, they made a big difference. So, I'm not sure is the answer, but I do know that in itself, that is not enough.
Syria used chemical weapons on its own people. What is your take on this potential danger zone?
I think in respect of Syria, I think the president's right to take this in a very deliberative way. But it's clear that if Syria continues to disintegrate, not just in respect of the issues to do with chemical weapons, but more generally, it's going to cause a huge problem across the whole region.
Is Syria the new big threat for the world?
The disintegration of Syria is a huge threat to the region of the Middle East, and I think we know enough about the history of the Middle East to know a big threat to that region is a big threat to everyone.
My thanks to Prime Minister Tony Blair. Up next, we're on the money. Do you see high consumer confidence reflected in these diamonds? The emotional pull of purchasing jewelry and what it means to the global economy. And take a look for us on Facebook/Maria Bartiromo. Welcome back. Do hard assets, the one that sparkles, offer escape or a port in an economic storm? Online jeweler Blue Nile is the largest retailer of engagement rings in the United States. Despite having no brick and mortar stores, the company's U.S. sales were up 21% last year. Joining me now is the CEO of Blue Nile Inc., Harvey Cantor. Harvey, good to have you on the program. Welcome.
Hey, good. It's great to be here today.
So we talk so much about market sentiment versus consumer sentiment. Buying jewelry is a personal choice. What does your business say about how customers feel about the economy in this climate right now?
Well, you'd have to think they feel pretty good about it. Our overall results in Q1 were really pretty significant. We delivered a nice double-digit performance growth rate. And what we think is consumers continue to be cautiously optimistic. There's a lot of influencers that suggest they're feeling pretty good.
So tell me about that. I mean, you announced first quarter results this week, net sales at $97 million for that first 3-month period of the year. Tell us about your business. Your pricing, for example, is lower than traditional retailers, but you can offer quite a range of price points, all the way up to $1 million?
Yeah, actually, our largest transaction is $1.5 million, and our prices at 20 to 40% below traditional brick and mortar stores really is a compelling value for the consumer. Last week we took, based on the gold price change, jewelry prices down around 10% for all gold jewelry.
We saw the biggest decline in the price of gold in 30 years last month. How does a change like that impact your business and your pricing?
One of the neatest things about Blue Nile is our ability to create different efficiencies and have a model that really allows us to take advantage of changes in pricing. We turn our inventory much faster, which basically means we sell through many times more often a traditional brick and mortar store. And as a result of that, we can go back and buy into the inventory at the lower price and then bring to market a better value. Are
you seeing demand change from where it was a year ago? What would you say the attitude is right now in terms of customers?
Well, I think the big story is that more consumers are actually getting married, and the consumer is feeling much more optimistic. And so discretionary spend is up a little bit, and we're seeing that across fine jewelry, but more importantly with the number of brides actually getting married.
Isn't that interesting? So the number of people getting married is obviously going to impact your business. What are the other critical impacts?
What we've done a lot in the mobile world is really regard the consumer's accessibility. They are really interacting with us more and more every day on a mobile device, whether it be an iPhone or a tablet. And we saw 40% of our customers coming to Blue Nile on a mobile device. That compared with 34% in Q4. And it's really accelerating. So that's one of the things we're really pursuing, making ourselves available where the customer wants, when they want us to interact.
Are you expecting we see a change in the sales tax?
I can't really comment on the sales tax specifically. We obviously see there's a lot of action in the marketplace and certainly with the government. But we'll continue to bring the value we bring to market, and we will certainly execute whatever legislation goes through and manage our way through that fine.
Harvey, good to have you on the program. Thanks so much.
Hey, it's been great to be here. Thanks so much.
We'll see you soon. Harvey Cantor joining us, Blue Nile. Up next, we'll take a look at the news this upcoming week that will have an impact on your money. And then Iron Man means business. The superhero, super industrialist, opens up Wall Street and a potentially blockbuster summer movie season. Stay with us. For more on our show and our guests, check out the website otm.cnbc.com. And I hope you'll follow me on Twitter and on Google Plus at Maria Bartiromo is the handle. First, though, here's a look at the stories coming up in the week ahead that may move the markets and impact your money this week. Earnings season is winding down. We've got companies reporting their quarterly numbers, including Disney, Marathon Oil, and Groupon this week. Monday is the 3-year anniversary of the May 6th flash crash. Remember that? That was wiped out nearly 1,000 points off the Dow Jones Industrial Average in minutes, only to recover moments later. Also on Monday, the Senate will vote on a new bill that will force internet retailers like Amazon and eBay to collect sales tax. Tuesday, March's consumer credit report will be out. That estimates total amount of outstanding loans to individuals. And finally today, supercharging the summer movie season, fresh off star Robert Downey Jr.'s bell ringing at the New York Stock Exchange this week. Disney's Iron Man 3 opened late Thursday in the United States. The superhero film has already dominated movie theaters. Overseas, the latest adventures of Avenger/wealthy industrialist Tony Stark raked in more than $195 million in its first 5 days globally. It could top a total box office forecast of $1 billion. That'll do it for us for today. Thank you so much for joining me. Next week, Home Depot founder Ken Langone and former AIG CEO Hank Greenberg will be here for a rare joint interview together. Each week, keep it right here where we are on the money. Have a great week, everybody. I'll see you again next weekend.